Welcome everyone to the Kendall Report. We are live and it is Thursday night, the final video for the week. And I appreciate everybody hitting that like button last night. I think we got 1.2, 1.3. So keep up the good work. Appreciate it. I'll keep showing up for you folks. So market rallied again. Look, ECB did the oh no 0.75. And the markets responded early in a negative way. Then all of a sudden, everybody realized, oh wait, we already expected that. So the markets rallied back. We actually printed up pretty good. I am switching over tonight to the nearest futures contract, so we'll get all that straight here in a few minutes on the S&P. So it's now on my near futures contract. We're in December contract. So hopefully these numbers will make sense to you as we go through that. We had a very interesting session today in the live room, and we were talking about this, what I always call the 3-day trade. And I will unpack that a little further. I saw some comments on the channel asking about it. And so far we've already met most of the criteria for a continuation. So the title of this video is Rally to Continue, and it's interesting if you go around, especially on Twitter, in the Twitter sphere, and you look at what the bears are saying. Man, these guys are really screwed up. They have no idea what's going on. You know, the end of the world's coming, the currency crisis, why are we going up? And I think that's going to continue. I will hone in on some objectives here from the standpoint of what I expecting on the futures. I'm not expecting any kind of big turnaround, big rally, but you know, sometimes these short-term situations turn into something bigger. And we'll go through a fair amount of detail because this is coming into a Friday. We had a short week and we're coming into Friday, so I'll talk a bit about our intermediate database, which is going to drive a lot of my feelings about going on as far as the markets as we go forward. And you know, just there's a lot of cross currents in this market right now, and that's what makes it so difficult. There is no cut and type pattern that's out here that we can go on right now. And so I am just going, folks, I hate to say this, I'm going to put you on pause for 1 second. If you would just hang on one second, please. Well, that was awkward. Sorry about that. In the parking lot at my office here, some kids will show up with skateboards. They're making amazing noise out there, very distracting. So I apologize for that. Anyway, we'll back on here. But there's a lot of cross currents that are going on in the markets right now, and you know, the currency situation is really is a thing. There is some problems there. But as I mentioned last night when we were talking about crude oil, nat gas in Europe and everything, there's millions of people trying to figure out how to make money on all this stuff that's going on, especially when things get broken. And I think we're seeing that. We did something, and I'll try to prepare for this on Sunday night, okay? But we did something in the live room today that I thought was really interesting. We just started reviewing all of the commodities, all the things that if you go on to talking head shows, they're telling you all the shortages and how everything's going up. And it's like, no, it's not. All the grains are down. Cotton collapsed. Lumber's way down. Every commodity, we've seen crude oil come down substantial. And every commodity, this is happening. So, like I hate to bring in Kathy Woods in here and say, maybe she's right, maybe deflation's on the way. But if you think about it, the Fed is actually, they're hell-bent on raising rates right now, and they don't want to back off. And the whole scenario of what's going on here from the standpoint of all of the commodities is, even they've already destroyed, demand destruction has already happened. And in the backdrop, because the labor market's the very last thing that is going to show where the weakness is. That's one of probably the most lagging indicator there is. And we did get some numbers out there, and jobless claims on a week-to-week basis were down to 222, so they came in better. Just to tie this together, continuing claims, however, was up 36K, and we got up to 1.473. And I've kind of just marked the line in the sand at 1.5 million. It's a random number. Just, I think it could be psychological if that happens. So I guess for the best way to bring this out here is all the commodities are collapsing. So I'm going to go through and try to put a scenario together for this situation that's going on. So, unfortunately, children in these days, their parents don't treat them well. I get these guys are going crazy out here. So bear with me one second. Well, that was fun. Hey, everybody. Sorry about that. And these guys are... Anyway, so let me try to get back in. I'm so sorry to disrupt the stream. That was absolutely crazy what's going on. I know you can't hear them, but I can, and it's so distracting. I can't think. So it's really bad. Okay. All right, folks. So let's get back into it. But basically what I was saying is that these commodities are all collapsing. And that's going, I think I mentioned this a while back, is that it's possible that this whole inflation peaking thing ends up to be exactly what's going on. And that may be the next scenario that maybe drives the markets a little bit. So let's get into the database and we'll get into the technicals here. I apologize for the disruption. I know you guys can't hear it, but I mean, I can't even think with what's going on in the background. So sorry about that. All right, so let's take a look. We didn't have much action. 406 new buys, 197 sells, and the result is nothing, right? We basically went from 53 and change, 54.79. Yesterday, that number is 54.09. So we clicked up a 0.7 on that. So there's nothing going on there. What I am, last week on the intermediate, we got a downtick, which was substantial. It was somewhat of a surprise, but based on how we closed last Friday, it was pretty ugly. So we did see about a 3% drop in there. And let me go full screen so you can see this. Is what we've got. Bear with me one second. On the research, what we have is 32.39 on the intermediate. And the result of this is that the uptick that I'm expecting is maybe back to where it was last week, 35. But I'm still telling you that there's a lot of these symbols. I've looked through, just randomly going through stuff and searching the database, and a lot of these weekly patterns are setting up here. Even on this page here, where the index. So this is the index of all the symbols in our database here. This is called the BPM top level. So this has all. It's not all 16,000 symbols, but it's about 8,000 symbols that exist in here. And we got a nice little right shoulder setting up. It's still negative. If I brought up PPMs, if I brought up PortfolioXpert, you could see the PPMs and all that stuff. And the whole pattern that's setting up here is potentially a nice right shoulder. We need a pretty big rebound to actually get it to actually be in a place where we can get the market to really start any kind of reversal. But my expectation is not necessarily to take out basis the S&P, you'll see here in a minute, not really looking to take out the 43.27 high the last time. There's a lot to set up here. We still have some negative PPMs to deal with, a whole lot of other stuff. But I'll be watching this database. You guys know the numbers. 42% or better is the thing that's going on right now. If we get above that, that would be something. Probabilities of that happening this week, I believe, are quite low unless there's some massive rally that occurs today. So let's go ahead and get into the technicals. So as I said, I've flipped over to the nearest futures. It's trading at 40.32. It's about there's a premium of about 15 handles in this contract. But look at PPM1. It has broke out through its first, second derivative. We're only down 0.11 right now. And PPM2 is trying to turn up. PPM3 is in position to get a little bit of a rotation. Now we have an interesting pattern right above the market right now at 41.15, and 40.98 is the 21 and 40 period moving averages. Those are going to be some big numbers to get through. I don't think we challenge that today, but we look at the PPMs right now. I'm sorry, at the market grid right now, R1 is 40.42. We've already printed so far tonight 40.37, so we've already printed R1. So look for a possibility of R2 here getting up to 40.64. I'm just going to, and on the downside, S1 is 40.02. We've been down to 22. I didn't think we'd see S1 last night. If we look at what happened last night, we did trade below S1. We traded between S1 and S2 and then rebounded pretty substantially. I'm going to bring up the March contract here just so that keep that context. Yesterday, if you look here, the high was 11. We just got above R1. On the downside, we were 39.56 was the S1. We traded down to 42. And I'll talk a little bit about this trade. So depending whatever contract that you're trading, I'm going to do it here on the March contract. So the March contract, as I talked about that outside reversal that we got, that was a pretty substantial move. And what that set up for, we needed to make a new high, a higher high than the previous day, which we did, and we needed to close higher, and we could not take out the lower close. So we did lower the low of the previous session. So we got all of the criteria here today. We closed higher, so the trade is going to the next day. The stop would go below the low of Thursday, and then we still need to make a new high, which we've already done, I believe. Let me double check. Yeah, we've already done that tonight. So we already have all the criteria. We just can't take out the low of yesterday, and you continue to hold that trade. So those of you there in the live room, we went through that in detail. We should get at least one more day up, and the possibility is going as many as 5. And I'll just cover this trade daily as we go through and we get confirmation. So I'll just continue to talk about that. Let's take a real quick look at the weekly. I just want to bring that up for a reference sake. Here is this right shoulder talking about. We're actually getting a decent weekly reversal pattern, and we're trading right now. This is the near futures again. We're trading right now at 40.34. 40.57 is R3, so we've already traded above R2. So look for the potential of this 40 to 60 level on Friday to print out. And the key level on the downside will just be that S1 number on the daily. So keep track of that. But we should see this pattern unfold for another couple days at least. Next market I'll cover is the NASDAQ. I'll stay with the weekly for a minute. This we're coming right into the 21 period moving average on a weekly, 12,561. But look at the PPMs turned up really nicely here on, and we're seeing some decent acceleration. We're at 0.60 on an uptrend on PPM1. PPM2 is still down, but if we can close above that, which should be the 12,560, so far we've had 12,475 for this week. So today's action is going to be pretty critical. If we did go out above that level, that would be a big positive and suggest we'll move higher in the pattern. So let's go look at the daily. The PPM1, like I said, is also turning up here, just like with the S&P. We've got the penetration of first, second derivative. So we're still negative here. We're minus 0.19. But what happens is we'll probably get, if we can stay above the 10, which is 12,340, we have that same configuration where the 10 and 20, the 21 and 40 are virtually at the same area, 12,854. That's 400-point rally from here. I don't expect to see that challenge today, but looking at the market grid, R2 is 12,557. So definitely look for S1, R2 on all of these indexes as we come into the Friday close. Okay, we'll look at RTY next. This is the daily. We're above the 10 already on RTY. I talked about this being the leader. Yesterday, Russell was up 0.81, while the S&P and NASDAQ were up basically 0.6. So it did a little better, not huge overperformance, but it's definitely there. And the pattern that is set up here is the same, with the exception of PPM2 is not turned up yet. But I love this setup here. It just tells us we're going to test this 1895, 1911 area. All of these moving average just above here. That's going to be a pretty tight range on the upside for today. And on Sunday night, I'll cover in a little more detail. Like I said, I'm going to try to get a setup of all of these commodities and go through maybe a little deeper dive on Sunday night. So we'll take a look at the 10-year. This is a bit confusing, but we still have the PPMs are starting to falter a little bit, but we're up 0.59, 0.78, 0.33. So we're still in big uptrend here. And the downside is around 317 is about all you could expect to get to. If we just look at the market grid for tomorrow, we finished at 392, 329. And what we're looking at here is the possibility of going down to maybe S2, 3.24, and then S3 is 3.19. I still expect to say a little sideways here, probably S1, maybe an R2, 334 could be in the prices. You can see the market grid turned up a little bit, but what we're seeing here on PPM 1 and 2 is they're trying to flatten out and turn down, but there's still very positive underlying trends here. So the absolute floor right now is roughly we're just going to call it 320, 319. 320 is the downside here. There's really nothing else going on in this market from the standpoint of what's going on the patterns. As far as any rollover, any acceleration, we're just maintaining this upward angle of attack on the daily. Let's go over to the weekly just to finish off the week here. You can see I talked about this. We do have a couple fib targets, 359, 378. Don't see those getting hit at the moment. But we are seeing the PPMs turn back up, so there's still a lot of upward pressure on these rates yet. But I would say that for whatever reason, the equity markets don't seem to be too concerned, especially if it's somewhat orderly. And the big issue, I meant to read an article that came across, was on Twitter from the Fed today, but they were talking about how they're handling the runoff and trying to keep all the markets liquid and how they're handling this trading. I wish I'd had it. I meant to read it. I got distracted and didn't read it. But there's definitely, like I said, the runoff has begun. They've got $95 billion that they're running off. So there's going to be competition out there on the sell side. So this is going to keep rates pretty stable to moving higher while we're going through this month. And what'll be interesting to see if we can detect what they're letting run off. So they obviously have a huge book, so they can decide which maturities they're running off and what they're doing. They could even let more run off in one and be buying and selling, just trying to meet their goal. They may be playing with the yield curve a little bit behind the background. It's just not all selling. It's not all one side. They're going to be on both sides of the market trying to work down over the month, trying to get those numbers down. So just expect to see rates continue higher, but to stay on this slope. And I laid out on the dailies exactly where the bottom end is likely to be. All right, so we're sticking with weeklies here. This is weekly crude. This was the thing that's really interesting here. We have ppm1 minus 0.225, ppm2 minus 0.68. I have been talking about for the last several weeks prior to when we got the close, even last week, that I thought, well, we'd rebound back above this number, above this 40-period moving average, 89.24. It looks to me that we're starting to see a roll of all of these ppms. ppm1, like I said, is down a minus 0.25. So we're in trend mode on ppm 1 and 2. And this is definitely a really big thing that's happening here, because it's suggesting we could see the potential of seeing a 70 handle come out of here somewhere. We printed so far down this week to 81.20, but we could see a little bit more. We'll see what type of update we get after tomorrow's close. But looking at, let's go to the daily, see if we can pinpoint some action for Friday. So we had a decent turn up. WTI was up 1.7% yesterday. We're up 0.29, so we're getting a bit of a rebound here. PPMs, though, are still very negative on the daily as well. All three of the primary, ppm1 minus 105, ppm2 minus 0.54, and 0.28. So we're in downtrend mode across the board. Now, one of the things that is happening, we've got a cycle that's coming in for today. So I'm going to assume that it could be a cycle low, so we could start to trade back into some of these averages. But these are really big downtrends that are in there right now. So there's going to be plenty of resistance between 87.60 and all the way up to 91 and a half. So look for that to be the ceiling in this market right now, and probably use the weekly market grid numbers for that. So if you have the indicators, you will have all of those numbers so you know exactly where they are. Cover gold here. Gold is just sideways. This is the daily. It's interesting that we are starting to see ppms turn up here. ppm1 has crossed first second derivative. ppm2 is about to do that, and we had a cycle low come in yesterday. So if we get some follow through, we get it's interesting that the moving average pattern that's set up here is coming right in to that same level. Let me just expand this so we can see this pattern just a little bit better. If you look here, you can see the 10 is still down, the 21's down, but we're trying to get to the point we're only down 0.13. So, and we're already trading above the 10. So look for, this is the daily, look for the potential of trading up 1726, 1733 are around R2 here. And the cycle that came in looks like maybe it could have some relevance as we come into next week. I'm just bringing up the weekly chart here real quick. This is something I've been talking about. ppm1 is trying to turn up. It's still very negative. It just suggests right now that we've got major resistance between the 1747 and 1762 level is the major resistance overhead on gold. Don't see anything here yet, but it's, as I've been talking about for a while, it's like it's defying gravity, right? It should be based on dollar strength and a lot of other things that happened. We probably should have collapsed, but it didn't. Same scenario with the next market we'll cover with Bitcoin. All right, let me get this pattern up here so you can see it just a little better. So this is the weekly Bitcoin. I talked about this a lot. We have a positive PPM1. Market needs to rebound back above there, 21,578. We're at 19,373. This pattern is trying to set up some kind of right shoulder. There's so much overhead resistance, so it's going to take, this is a weekly chart. We're talking probably 6-8 weeks to really set up a bottom if we continue to hold this. And the first signs that we're actually going to set up a bottom will be getting back above this 200-week moving average, which right now is 23,232. So right now, that between the 10, which is 21,578, and 23,232 is going to be major resistance. If we break much below this 18 handle, 18,635, then we could see a big decline. But based on the configuration of the PPMs, it doesn't look like there's about to be a big downward acceleration at the moment. Okay, folks, this is going to do it. Sorry for a couple of interruptions. It was very distracting. I couldn't even think when I know you folks couldn't hear it, but I could. So anyway, thanks a lot. Make sure you get these indicators. Just a brief announcement. Those of you that are invited into the private room tomorrow on Discord, right now we still just have the private room. The plans is I will be announcing how to get to our public room on Sunday night, so get ready for that. And we're hoping to build this community out, and there'll be some private rooms. There's going to be probably multiple channels that we plan on offering there. So anyway, look forward to seeing you folks there. And I even plan on doing some live events in Discord as we go forward on both the public and on the private. And we have another piece of software where we do our live room is a private software. It's not in a community type based environment like Discord or any YouTube or anything like that. So, but we will be doing quite a bit of stuff. So make sure you do that. Hit the like button, subscribe, and we'll talk to you folks on Sunday night. And those of you that are in the meeting tomorrow on Discord, we'll see you then 1 o'clock on that meeting. You should have an invite in email. All right. Thanks a lot, everyone. Have a great evening. Good luck trading tomorrow. And hopefully these numbers I laid out tonight will be helpful in you navigating through the end of the week. Have a great evening.